Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was kind of a topsy-turvy day to begin the week. Most of the majors gapped lower against the US dollar to start trading off in early Monday trading, only to reverse course and to test significant resistance and support levels heading into Asian and European trading, only to reverse once again in early New York trading. And it seems that most of the majors are getting ready to close near their lows of the days. There could be a general trend lower if we could break significant support and resistance levels that many of the majors are sitting at. Heading into tonight's trading, we have the Australian Reserve Bank rate decision. The interest rate is expected to be kept in line at 3.5%, but there could be a little bit of volatility in the Aussie if we get dovish commentary after the release and any comments about a possible slowing of China and how this could affect the economy in the near future. Let's look at two pairs today that I would be watching heading into Asian and European trading. The first is the Aussie USD, because we have the interest rate decision this evening. But it is interesting that the pair, as you can see, is moving down in the last 4 hours. That the pair has throughout the last week or so basically had a battle between the fib levels from its recent rise higher. Higher, and the top of its range has basically been the 0.382 fib at 104.50, and the bottom has been the 0.618 fib at 103.40. We would need to get a break of either the top of this range, which would also break above the trend line, to continue to get a move higher, and the first target in there would be 105.20, or we would have to break below the bottom of the trend range at 103.40 to have an initial push lower towards the 102.8 area, which would also be the first level of price resistance, and it would also represent the bottom of the existing channel lower. So currently, my view on this pair would be to stand aside until we get a break of either the bottom or the top of the fib levels. You could try to play the fibs if the pair does not break out following the press release after the RBA bank decision. But at this point, I would stand aside until we get a break to the top or the bottom. The next pair I'm going to look at is the Great Britain USD, just because this cross is currently moving up towards moving back down towards initial support on this declining trend line that has contained the price action over the last year or so. Let's go back. You can see that this trend line goes all the way back until March of over a year ago, almost 2 years ago. And if we see that the pair broke above that last month, but it hasn't been able to gain much momentum moving higher, and now the cross is moving slowly and steadily right above the pair. But what we have right ahead is the ascending trend line that has capped the price, that the pair has rode higher over the last month in its current ascent. So what's going to happen in the next few hours or a day or so is, if the pair doesn't break below this 106.1 area, it is going to hit this trend line. So it's going to have to make a decision at this point if it's going to continue higher or it's going to break below at least this level, which wouldn't be nerve-wracking, but it probably would stimulate the pair to move lower below the descending trend line. Now, if we do get a bounce off this level, the first area of target would be the 163 area. But if we break below it, we can initially would look for a move down towards the fibs, which I would see the first fib from the recent decline is at 0.382, which comes in around 160, and the next 50 fib is at 159, and the next is at 158. It is interesting how they are perfectly linear like that. Okay, so going into tonight's trading, I'm going to be watching the Aussie and the rate decision and the Great Britain pound, looking for a pair of the resistance zone, which currently comes around 160, 110. All right, this is Currency Watch. This is Chris Keene from a keen point of view. Remember to keep your trades keen and to play it safe.